Mario, welcome. Good to have you with us as always. Great to see you.
You too, Tyler, and you too, Kelly. A great day to be here.
Looking forward to the conversation. You say that there are 3 A's that you have your eye on right now. Good. Thanks for the mnemonic device, or whatever that word is. Automobiles, aero defense, and agriculture. Let's start with agriculture. Why are you focusing there right now?
Well, we look at the cash flow of the American farmer. Beans, wheat, corn, that is commodities, plus livestock, significant opportunity to use that cash flow to buy equipment. And the equipment is 100% write-off under the current rules. So, you know, I'm not wearing this because it's St. Patrick's Day, Tyler. I'm wearing it because I like John Deere, but I also am recommending Case New Holland, which is an equipment company with about 1.3 billion shares selling at $15. So we look at how much will the farmer spend. Then the ecosystem includes the fertilizer, the wheat, the herbicides, the pesticides, and so on. And to the degree that we need to encourage the American farmer to continue to produce, go fence to fence on his plantings, that's very important to fight inflation, which is the enemy number one. This button is not for the it's not for March Madness. It is for 8 years ago, 1974. Whip inflation now. And that is got to be along with the other dynamics of invasion and so on. And interest rates are one of the dynamics that center our orchestra. So that's what we think about. So that's the agricultural ag system. The second system is aerospace and defense. The amount of money that is being put incrementally in the budgets by NATO, by American companies, and what we will have to do to anticipate what may happen in the future as opposed to look through the rearview mirror as we've been doing. And in that regard, we have companies that we own, our clients own, Aerojet, the stock's around 38. They are a leader in the hypersonic dynamics that we have to worry about. The Maginot Line in the 1930s, Tyler, was similar to our Minuteman missiles of today. We've got to replenish that. Then in addition to that, we have companies like Textron that are doing a very good job of what they're doing. And then some smaller companies where we own called the Common and so on. But then the third part was the auto sector, automotive. We at the car dealership level have 1 million cars approximately in the United States, 2 million below what it normally is at this time of year. So we have a long runway to build production up over the next couple of years. And that's an important part, in quotes, the consumer sector in durables. The second part is the used car prices are up sharply, which means that the loans that we have been taking out, 72 months, 82 months, that's going to be easily repaid. Third part is that the fleets, the rentals, government, and others that represent normally 25 to 30% of the car market, they're not there. So, Tyler, we have a very outlook over the next couple of years. So vendors that sell stuff for EVs, vendors that sell products that are U.S.-based or North American-based, those are kind of intriguing to us. And then in addition to that, I have to wear my Napa hat. National Automobile Parts, 140 million shares. The stock's about 125 down in Atlanta, Georgia. They've got a little hiccup in the European operation, but on balance, you're going to see earnings surge. And more importantly, Tyler, when inflation picks up, even though real GDP may slow down, the basket of auto parts prices going up allows them to flow through more or less with a constant gross margin, but SG&A don't rise as much, so earnings have great flexibility, well-managed companies. So those are the things we think about, Dana and others like that.